Self-balancing ledgers Part 3 General Ledger Adjustment Account. Dear students, today let us learn about the system of self-balancing ledgers, General Ledger Adjustment Account. The self-balancing of a general ledger will not need any further adjustment entries, inasmuch as every time that an adjustment entry is made with the total of any subsidiary record to self-balance a set of transactions in any trade ledger, the contra entry is made in the corresponding trade ledger adjustment account opened in the general ledger. The bought ledger adjustment account and the sold ledger adjustment account, which appear in the general ledger, will now take the place of debtors and creditors accounts in a summarized form and thus serve to complete the trail balance of the general ledger. The debit balance of the debtors ledger adjustment account in the general ledger must always correspond with the credit balance of the general ledger adjustment account appearing in the debtors ledger. Similarly, the credit balance of creditors ledger adjustment account in the general ledger will always agree with the debit balance of the general ledger adjustment account in the creditors ledger. It need hardly be pointed out that in regard to numerous other transactions which do not relate either to customers or suppliers accounts, no extra adjustment entry will be necessary for self-balancing purposes, inasmuch as both the original debit as well as the credit in respect of each such transaction would have found their place in the general ledger. Taking the case of payment of staff salaries, we find that salaries account and the cash account are the bank account, both related to the general ledger. Let us take the case of a cash received on account of a bill receivable. Here also we find that the cash account and the bills receivable account both belong to the general ledger, and the original debit as well as the credit in respect of this transaction having appeared in the same ledger, no self-balancing entry would be called for. It is only in case of such transactions in respect of which the original debit and credit may have gone in any of the trade or personal ledger and the corresponding credit or debit in the general ledger that contra entries to self-balancing both those ledgers would be needed. Another point which needs to be mentioned here is that the debit balance as shown by the debtors ledger adjustment account on any particular date must necessarily tally with the total of the customer's ledger balances as extracted on the same date. Similarly, the credit balance appearing on the creditors ledger adjustment account on any one date must necessarily tally with the total amount of the list of creditors obtained in the creditors ledger as at that same date. In other words, the debtors ledger adjustment account and the creditors ledger adjustment account in the general ledger always represent summarized accounts of the debtors and creditors respectively. Arrangement of ledger accounts. For the purpose of proper working of the system of self-balancing, it is important to bear in mind that in the debtors ledger or ledgers will be opened only the accounts of our trade customers, and in the creditors ledger or ledgers will appear the accounts of our trade creditors only. Thus, for instance, if office stationery is bought on credit from Damodar, such an entry will go through the journal and the stationery account, as also Damodar's account will both be opened in the general ledger. Again, if some old factory plant is sold on credit, the entry will be passed through the journal, and the purchaser is not being our ordinary trade credit customer, his account will be opened in the general ledger. The ledgers including the accounts of customers are variously known as either customers ledgers, debtors ledgers, sold ledgers or sales ledgers, bought ledgers or purchase ledgers. Those including the accounts of trade creditors are styled as creditors ledgers, suppliers ledgers, bought ledgers or purchase ledgers. The ledgers wherein are found all the remaining accounts is variously styled as general ledger, nominal ledger or impersonal ledger. Buying and selling transactions with the same party. Where transactions in buying and selling take place with the same party, as it does happen sometimes, it is necessary for the purpose of self-balancing that two separate accounts of the party should be opened, one in debtors ledger to record our sales to him and the other in the creditors ledger to record our purchases from him. At periodical intervals, however, on our settling account with the party, it would be necessary to transfer the balance of one account into the other. Usually, the smaller account is transferred to the larger. Thus, either the bought ledger account balance may be transferred to the sold ledger or the sold ledger account balance to the bought ledger account. Such transfers would be made through the journal, and the question of passing contra adjustment entries for self-balancing purposes should not then be overlooked. In a business where such transfers are of frequent occurrence, a separate transfer journal is maintained to facilitate periodical postings to the adjustment accounts. Transfer from one trade ledger to another. When a transfer is made from one trade ledger into any other trade ledger, two extra adjustment entries would be needed. Thus, if the credit balance of ₹50 on Smith's account in the creditors ledger is transferred to his account or to any other account as per his instructions in the debtors ledger, the extra adjustment entries needed would be as follows. Creditors Ledger Adjustment Account debtor 50 in General Ledger to General Ledger Adjustment Account in the Creditors Ledger ₹50. General Ledger Adjustment Account debtor 50 in the Debtors Ledger to Debtors Ledger Adjustment Account in the General Ledger ₹50 credit side. Transfer from one trade ledger into another. Again, if a debit balance of ₹100 on A's account in the sold ledger is transferred to his account in the bought ledger, the two adjustment entries would be as follows. General Ledger Adjustment Account debtor in the sold ledger ₹100 to sold ledger adjustment account in the general ledger ₹100. Second entry. Bought ledger adjustment account in the general ledger ₹100 to general ledger adjustment account in the bought ledger ₹100 on the credit side. These two entries in both the above cases will serve not only to self-balancing the bought and sold ledgers, but will adjust the bought and sold ledger adjustment accounts in the general ledger. The important point to note is that these accounts reflect in a summarized form the total position of the creditors and the debtors as detailed in the creditors and debtors ledgers respectively. It follows, therefore, that whenever any self-balancing entry is made in any of the personal ledgers, the contra posting thereof must be made in the adjustment account representing that ledger in the general ledger. In the next lecture, we will discuss about self-balancing ledgers part 4, problem and solutions.